Hello and welcome back to the Active Spirit Live Edition, a video series from Active Chartered Financial Planners where we talk about some hot topics, emerging trends and offer guidance in the world of finance. In today's edition we're going to be talking and looking at DIY investors, how they choose what to invest in and what risks and benefits are involved. Joining me are professional footballer and young investor Bailey Peacock-Farrell, who is a goalkeeper at Burnley Football Club, and Fraser Wilkinson, Executive Director at Quilter Cheviot. Quilter are discretionary fund managers that specialise in investing and advising families with their portfolios. Together we will provide an insight into how people of Britain are investing their money. So, a recent FCA report conducted with Britain Thinks actually suggested and warned younger and more inexperienced investors are taking on greater financial risk than their resilience. Social media also plays a huge part in this, and actually 63% of those who are investing with less than 3 years actual experience actually say they make their decisions based on what they see on social media. So I will come to Bailey first. You're clearly a young investor. You've got a great strong social media presence, and due to your job you probably come across far more than most of us. But how do you go about choosing what you invest in, and what's your experience has been so far?
For me personally, how I choose to invest is, I think the hardest part was finding the right people around me to trust, and I think that was the biggest thing for me in terms of that. I don't tend to invest on a whim as such in terms of what I've seen trending on Twitter or things like that. And I will probably, like we've done before, Carl, I've texted you about certain things when I've heard about Bitcoin, for example, or things like that. And I tend to, from my investment side of things, I tend to leave it to the professionals as such.
You said when we spoke the other week actually that sometimes with the younger investors it's almost like that instant win, it's that instant gratification and quick gains that they're looking for. Have you seen that certainly around people that are around you or within your age category?
I think so, yeah. I think it can be one or two things. I think it can be like a slight form of gambling, just on a different platform as such. Instead of being at a table in a casino, you're doing it on a stock, and when you don't do your research or you're just going off what you find on social media or talking to one person at a pub or whatever, I think your information is quite limited, and then when they make their decisions on the basis of that, I think it's not great in terms of that instant gratification. Yeah, I think a lot of people in my generation want that quick fix, that next best thing. They want it now, and I believe they're chasing that.
Yeah, we certainly see that, and I'll hand over to Fraser now. You and I have been in the industry for a very long time, and we know that it's not about the quick wins, and the good old tortoise and hare come to mind. What's your view on the younger DIY investors at the moment?
I think for a start, it's very difficult for younger investors to actually access financial advice. The protections for investors in the UK, if you take advice from a FCA regulated company, is very high. And there are a lot of risk warnings and trying to protect you from yourself when taking professional financial advice. But you have to find a professional financial advisor and you have to pay for it. And that's sometimes quite a barrier to people who are just wanting to start investing £100, £500 just to get started. So when you're investing without any research, any support, any professional advice, there are a huge number of risks. One is just getting caught up with the crowd, just getting excited because something's gone up and therefore it must continue to go up. I had a quick look just before this at the difference between investing and gambling. And of course, when you're investing, you are looking at the profits of a company, you're looking at the profits of an investment, something tangible, like the rent of a property, or the profits of Tesco's or something like that. And those profits have been getting smaller and smaller, but the price has been going up and up. So I'll give you an example. The 500 largest companies in America, you used to pay for $1 of earnings from that company, $16 for the company. That's the average over the last 90 years. Now, currently, it's 42. So you're paying 42 times this year's earnings for the company. So you're getting much less reward for the risk of investing. So that's the concern. It's gone up in price, but what are you buying, and what's the realistic returns out of it when the tide goes out and you're left with the only one holding the investment?
Yeah, thanks, Fraser. And it is that risk, and it's a scary stat, isn't it? 63% can afford to actually lose the money that they invested, despite them still doing so. If you were to quickly summarise the risks involved with investing, what would you summarise it as for the DIY investors for today?
Be careful of the gambler's high. It's quite self-reinforcing. If you make some money, you think, well, I'll do that again, even though you might not really realise how and why it's doubled in price or whatever it is. So just be steady, diversify, invest of lots of different things, and make sure you take proper advice.
Now, another major hot topic at the moment is the likes of cryptocurrency, Bitcoin, and Coinbase, which I believe floated yesterday. Fraser, what do you know about that?
Extraordinary. One of the biggest stock market flotations we've seen in cryptocurrencies. This is a company that allows you to buy cryptocurrency assets. And I was amazed to read that 59 million Americans have a Coinbase account, which is just staggering for a magic number gambling machine.
That was the talk of the training ground yesterday, Coinbase.
Yeah.
And how it was going to be released at 2 o'clock. And then we're all sat just like looking at 2 o'clock on eToro and trading 212 and seeing what, waiting for it to go live. And it went live like later in the day, and it dropped instantly in price. And
Scary.
Like a few of our players, but I'm not like going to say numbers, but enough for their faces to change when the price drops by a good amount. And like you said, there's no real reason to back up the Coinbase as such. And of course, it's been on social media and Twitter, and it's been hyped up, and it's being pushed as the next thing and all that kind of side of things. And you can't help but try and jump on that bandwagon and think this is the next one that's going to blow up like Bitcoin did. Like, this is the start of the new Bitcoin. Let's get in early and watch it rise and go up to like 60,000 or whatever Bitcoin is at the moment. But yeah, that's kind of what we just spoke about today was summed up yesterday.
Yeah, it's crazy. It scares the life out of me. Honestly, it genuinely scares the life out of me. So whatever your age or background, making financial investments never comes without risk. So it's essential that you remain vigilant and aware of the risks involved with any investment. Ensure you talk to regulated professional advisors like ourselves before you decide to invest your hard-earned savings. Thanks again for joining us on this episode of the Active Spirit Live Edition, and thanks very much to my guests, Fraser Wilkinson and Bailey Peacock-Farrell. Join us next time.